Welcome to RegTalks, a podcast dedicated to the ever-evolving world of RegTech and financial regulations. My name is Claus Christensen, and I'm the CEO and co-founder of Know Your Customer. We're an award-winning RegTech provider specialized in corporate client onboarding, KYC, and anti-money laundering compliance. Today, it is my pleasure to welcome Victor Yim as my guest to our podcast. Based in Hong Kong, Victor leads the global fraud solutions for TransUnion's Asia-Pacific region. In 2017, he successfully launched the first document forensic and biometric-based e-KYC solution for individuals into Hong Kong. Interestingly, this technology has powered the first remote bank account opening service in the city and has been adopted by many major financial institutions, including a few virtual banks. Victor, thank you so much for being here.
Thank you, Claus, and thank you, Know Your Customer, for inviting me. It is my pleasure to be here and share some of my views.
That's what we're looking forward to. I'd like to start by discussing a very hot topic that we briefly mentioned in your bio as well, and that is the rise of virtual banks in Hong Kong. Over the past couple of years, the HKMA has introduced these new licenses for banks that cannot have any physical branches, but can only operate digitally. From your point of view, how has the banking landscape in Hong Kong changed as a result of the introduction of the virtual banks?
So definitely the biggest change is there are more people opening bank accounts. According to some statistics, Hong Kong has a 95% banking population. So originally the demand on opening a new bank account has been very moderate or minimal before the virtual bank era. However, things change ever since, with different driving force, of course, including government subsidies, I think last year because of COVID. And one of our virtual bank clients have already on board a pretty significant size of customer, which is equal to a tier 2 banks in Hong Kong in the last 9 to 12 months. And on top of that, of course, the overall user experience expectation has kind of shifted by these digital native banks. So consumers expect more. Manual assistance or try visiting the branch will no longer be an option. And I also see in general, the market has become very competitive. So better product features are coming out. For example, 6% online spending rebate and 11% food delivery rebate. So yeah, very attractive incentive for you to use the service of this kind of virtual banks. And that also create another phenomenon, which is the rise of a debit card, which has never been a popular product in Hong Kong. Every one of us has more than, I would say, 3 credit cards. But I didn't own any debit card. I mean, of course, for ATM taking cash, but I don't necessarily use it. But because of the virtual banks, actually, I apply for 2 and I have 1 in my purse. Eventually, related to TransUnion, remote bank account opening now become a norm. And majority of the consumers expect to open a bank account remotely. Nobody wants to queue in a branch. Although because of COVID, there might not be any queue, but nobody wants to travel to the branch to open a bank account.
Thank you. That is actually quite interesting. What I found fascinating is your remarks about the success of the virtual banks. I've always thought of Hong Kong as a more traditional market where people, yes, had multiple accounts, but weren't all that interested in new offerings. I guess that is a wrong picture because these new virtual banks have been phenomenally successful in onboarding customers in the very short term, right?
I think a few of them are really having a very serious business strategy. I think most of the people in the industry has same kind of expectation, especially from the traditional banks. They didn't really concern about the competition. I don't know whether we can already say these virtual banks are successful from a P&L perspective. Majority of them are still burning cash, just like a lot of the fintechs, even Tesla, right? But I think the economy has changed. Not necessarily P&L is the most important. I think maybe I can give 2 examples. One is one of the virtual bank as a consumer, although they are also using our service, but as a consumer, After applying for that virtual banks, I got more than like 200 Hong Kong dollar worth of coupons. And opening a bank account took me 5 minutes. So I got 200 Hong Kong dollar. But then when I need to spend it, I need to bind this newly opened bank account with the e-wallet of this provider. And when I go to spend it on a supermarket, they automatically enroll me as a loyalty program member of this supermarket. So from an ecosystem perspective, this is like perfect. From banks to wallet to spending to the merchant to providing the loyalty program to the merchant in really seamless manner. I would say if I'm a traditional bank, I really concern how I can compete with these people. And another example is, of course, the kind of gamifications. Another virtual banks that I'm a big fan of. Using their app is really fun because of how they do the rebate. I always check whether this transaction I got my 11% rebate or the 6%. And they don't rebate you directly. They give you some sort of like a token. And you can change the token back to cash. So all these are very fun to play with, and they're real money. And to add to that, these banks also give me 1% interest without any fixed deposit whatsoever.
Well, for me, the most poignant change really is the change in consumer behavior. We all have changed behavior due to the appearance of these virtual banks to some degree. With my own personal background from Germany, where I grew up, German people would normally have one bank account like for life. For the first part of my life, when I still lived in Germany, I really only had two. One bank from early stage until I was late 30s. And then I changed to the biggest bank in Germany just because I could get a bigger business loan with them. And that was the only change, literally, that I did while living there. Now, today, things are different. I open my mobile, I have a folder for my bank accounts. That really has changed now. And in Hong Kong, I'd say people are especially interested in having the right rebate and the right economic incentives, but they change behavior now. That is what I feel.
Absolutely.
TransUnion has a big part in all of this, as we heard already. I would love to know what moved TransUnion, a company strategically known for credit scoring, towards the space of e-KYC verification and being a RegTech company. Welcome to the space.
Yeah, thank you, Claus. So for TransUnion, although especially I would say in Hong Kong, a lot of people only know us as a credit reference agency. But our vision has grown beyond that for a long time. We are now a global information and insights company, and our mission is to make trust possible between business and consumers by ensuring that each consumer is reliably and safely represented in the marketplace. Especially in this period, the post-COVID, where like work from home is a normal behavior, and some of the country still have lockdown from time to time. Trust is really important in the digital world. And we do this by having an accurate and comprehensive picture of each person. So that's why we started to make use of credit information for the purpose of identity verification many years ago. And by combining that with biometrics and machine learning technology, we created TruValidate, which is the first in market regulatory proven e-KYC solutions. It became a fundamentally building block in enabling financial ecosystem in the digital world, and also a key enabler for the Hong Kong fintech industry. When we talk about RegTech, it is kind of a trendy term. I remember it was invented by a consultant in the UK, something like that. But then acquiring a credit reference agency is regulatory required in Hong Kong for all the banks. So actually, by definition, TransUnion is somehow a RegTech provider for all these years. But of course, as you mentioned, since then, we expanded from credit into ID and fraud, and we have the right timing and vision, and we are lucky enough to be one of the key players in the market and being recognized as a RegTech provider in Hong Kong.
Very cool. We are quite fortunate in Hong Kong to have a regulator, the Hong Kong Monetary Authority, that is actively promoting RegTech adoption in financial services. Based on your experience, what has been the role of the regulator in driving the RegTech revolution here? More specifically, what concrete steps that the HKMA has taken have been most effective in driving some more adoption of RegTech there?
Yeah, again, I think we might want to start it a bit earlier before even we emphasize on RegTech. So I still remember 3 or 4 years ago that the first FinTech Week was organized in PMQ. I don't know whether you attend that one. In fact, I enjoyed that one most. It wasn't as big of a scale as those organized in Asia Expo or the Convention Center in Wan Chai, but the atmosphere and the kind of entrepreneur spirit was more exciting. And I think since that time, HKMA has been very active in promoting or supporting the industry and creating these kind of venues for startup and fintech in promoting the solution, engaging with prospects or investors. And of course, with the recent evolution into RegTech, HKMA also distributed a letter last July to ask AI to support the development of regulatory technology of RegTech, and also appointed an agency to help organize and roll out a series of activity to support the adoptions.
For the listeners, you mentioned the term AI. Many listeners would think of that as artificial intelligence. In this case, it means authorized institution. It's the regulated banks and financial institutions there from HKMA's viewpoint.
Yep. On top of that, I also witnessed how they become more prescriptive in terms of their guidelines. So in the past, the guidelines is quite high level. Is the AI's own freedom of interpretation and how to execute. But nowadays, for example, the remote onboarding guidelines for individual or the one for SME, which is issued last year more recently, is quite prescriptive. For example, for the individual, they ask for something like the hologram detection. So something that from a machine learning perspective is not something very easy. It actually create a lot of opportunities for the RegTech industry and for both banks to adopt these kind of solutions and for vendors to penetrate the market as well as developing very interesting, innovative new solutions. I think it is really exciting for us, and we are lucky, as you mentioned. And I'm looking forward to be part of the development in the next 2-3 years. And I do hope that Hong Kong can be a hub on RegTech development, creating the exchange of ideas and also the development of new talents.
I'm sure it will be, because there's at least 2 of us here that will add to that. I found it very interesting. You said that they started very general and then get more prescriptive over time. I think this is something we will see more from central banks and regulators worldwide. You mentioned the hologram on the card. I've noticed a similar thing happening in Japan, where they started relatively high level, but went as far as requiring the automatic detection of the thickness of your identity card by requiring people to turn the card in front of the camera so that you can see it's not just a paper, it's actually a card. Don't think HKMA will go as far as that right now, but they are getting more prescriptive and more direct. And that's a good thing because it will allow everybody to conform to the same standards in the end. Of course, many RegTech solutions, including our own, are relying increasingly on artificial intelligence. There's the other AI. From your point of view, what are some of the key challenges in incorporating AI models within regulatory compliance solutions? Are you encountering resistance among practitioners? If so, what are these?
So based on our own experience in promoting or implementing our own e-KYC solution, there are, I think, 3 areas that I would describe as the key challenges. First, the transparency. Second is the explainability. And the third is the effectiveness in the validation of models. So these are the three challenges, I would say. And of course, these challenges also came together with the guidelines from HKMA in using AI. From a transparency perspective, I think it is tricky because on one hand, solution providers like ourselves have to protect our IPs and secret recipe. But on the other hand, the regulators is actually asking for high level of transparency on how we train our model, how we tune our model, and how we validate our model. If we explain to them all these how, then pretty much everyone can do it, right? So that's very tricky. Second is the explainability. So for those who are familiar with machine learning, like technique like neural network algorithm is often considered as a black box. And actually getting this kind of black box to be approved by the regulator is a lot more difficult than the traditional modeling technique, such as regressions. And the third point is the effectiveness in the validation. So in the world of traditional, for example, credit risk, in fact, model validation is well understood and well defined using Gini coefficient, etc. And there are usually a lot of data to do so. For example, using the TransUnion bureau data. Of course, in the world of SME or corporate lending is another world, but they also have very well proven technique in validation of those models. But in the case of machine learning, and in a lot of use case, just like what you mentioned, like how you detect a fake ID, how you determine that turning of the ID card is valid or not. There are basically unlimited possibility in real world scenario. The light conditions, how fast you turn it, how old is your ID card, because some ID card can be like 10 years old with all the color wearing off. So these are all the unlimited possibility that you would not be able to recreate. And to add to that would be the privacy concern, because for example, ID cards are all personal identification information that, of course, every one of us has to handle with care, with the PCPD in Hong Kong, with GDPR, and how you can possibly use thousands and tens of thousands of those PI information to train your models is another major challenges. So I would say these are the three major challenges. Even though under this challenge, we are lucky that our client have been able to obtain the required regulatory approval when they launch their solution with our support.
Very good. We see a similar trend that the advantages of AI are just so big that you do want to use them, and that you do have to do some work to make it compatible with regulators' views and with clients' hesitations. But the payoff is so large that it works in the end. In our own solution, we went the other way a bit. We limited the scope of use of AI to very specific problems where it's easy to grasp how this is implemented and how it is explainable. I would say it would be very difficult if we just presented a solution to the regulator and said, well, we plug in all the inputs on one side and voila, on the other side, there's just a decision. Yes, on board. No, don't on board. That is probably not possible. Great. Victor, this has been already fascinating. I have one more question that I ask all my interviews. If tomorrow you woke up and you had become the global financial regulator with all the power, what would be the first thing you would do? And of course, why?
So that is a very fascinating dream. And if this dream comes true, I think I will be enforcing to create an information sharing framework across different jurisdiction, industry, companies, domains to improve the effectiveness of combating financial crimes. However, of course, privacy protection has been a growing challenge to all of us in the industry. And that's why TU is actually exploring new technologies such as blockchain, federated learning, so that data sharing and machine learning with the data would be possible without compromising data privacy protection. Yeah, this is what I believe would be very useful to the industry.
Very good. Victor, this has been a total pleasure. Thank you so much for all your insights, and hope to see you soon again.
Thank you, Claus. It's my pleasure. Thank you very much.
Thank you for listening to this episode of RegTalks. My name is Claus Christensen, and I'm the CEO and co-founder of award-winning RegTech provider Know Your Customer. If you liked the episode, please subscribe to the whole series and leave us a review. And if you'd like to connect with us, suggest a guest or a topic for an upcoming episode, please send us a message at info@knowyourcustomer.com or visit knowyourcustomer.com/RegTalks.